Welcome to another AriasWave market update. Okay, so I haven't done one of these videos for quite a while. It's been, what, a few weeks, almost a month. There's a reason for that, and that is because there's been a lot of things going on over the last few weeks in general, not just in the markets, but with my analysis. Um, you know, me as a trader, me as an analyst, me as in me. Okay, so there's a few things, but I also want to tackle this one straight from the top, straight from the first and most important chart that I believe is the bond market, the 10-year bond yield, the inverse of the bond market, the one that basically gives you free money up until a certain point. So I need to warn people right now, just because I'm getting some people talking about Elliott wave, and they need to just understand that Elliott wave is not very reliable. That's why I made Arias wave. Just need to say that first, because if you're trying to determine certain things off EW, you're going to hit a brick wall. Okay. Thinking that the trend is not down in the stock market because of EW when the trend has been down since, like, seriously, like the end of last year. Just be careful with how you are interpreting this EW stuff, is it's not very good. Okay, so anyway, long-term view of the bond market. I have data going back to 1100 AD. I've mentioned this before. I teach this stuff, and I understand that this pattern here since 1981 is a wave D down. Okay, a wave D down. D is a zigzag. Yes, this has been a zigzag pattern to the downside. Okay, and I have mentioned before that this is going to retest after the break of this. When we got the break of this area here, this previous wave 4, we're going to retest that trend, the channel back down, and we have, and now we're starting to push back up. Okay, so there's a few things to talk about here today, so I want to start off with this one. Now, there's only two patterns that occur in the market. This is the basically the fundamentals of wave analysis when it comes to Arias wave, and that's a zigzag and a 5-wave move. Now, if you know what corrections do, then you'll understand what I'm saying. If you don't know what corrections do, then you're probably following EW. So, in my last update, I got my member Joshua to just go for some waves with me, and he learned a lot. And I rediscovered uh, basically the reason why I started this, which is pretty cool. And that's to not let your biases get in the way. So I've taken that to the charts once again with a fresh perspective, and I just want to point out a few things. So this one, I've always known that it's going to bounce. You go back through my videos, I've been saying it for a long time now. We're expecting a move in interest rates to go north to complete a zigzag that started a long time ago. Okay, a long time ago. So after we hit that massive high, which we don't know where it's going to go at the moment, there's no telling. It could go as high as, probably not higher than 20%, right? I don't think so, because the chart data that I have when this zigzag down started, it's around 20%. But how accurate that data is, I don't think it'll go above it. If anything, it'll double top here on this chart. But we need to see that E wave up before we get to see the big smash down to probably go deeply negative. And that's going to coincide with the top of this, will coincide with the bottom in what's coming in the stock market and cryptos for that matter, right? So that one is important to understand. Now, I'm going to go to a chart that a follower has asked for oil. He wants to know what's happening with oil, and I'm gonna give you my long-term perspective on oil. Now, one second. Anyway, so I'm gonna explain this to you like this. So I don't look at oil or interest rates on a log scale because of the non exponential nature of the chart. Everything else I do. Oil and interest bond yields, I don't. Okay, so if you know the history of oil, and if you know that there are certain combinations of patterns that can happen and different variances of those patterns, which I call wave components, then basically this takes me back to what I did with Joshua, but I started applying it to all charts in, just very logically looking at things in a way that is a process of elimination, which is what you should be doing. But you need that process. You need to understand what you're eliminating. And that's the whole point. If you don't know what you're eliminating, then it's not going to work. That's why that analysis that I did with Joshua was so eye opening for myself. It reminded me of why I started this in the first place. Okay, so to start off with, we need to remember that this went back to zero. Okay, now oil would have started at zero at some point back in the 1800s, right? Go back and do your research on the history. There would have been a wave one at some point, right? And then there would be a corrective portion to that pattern. And this is what I call an expanding correction, right? And that's noteworthy, especially in such an inflationary environment, right? Such as money printing during the time that oil has been around. Okay. So at some point, there would have been a wave one and two. Now, I have a chart where oil did go up and then come back down. Now, this, I believe, is a B wave up. Okay. This type of pattern here is a type 2 weak 5 wave move. Okay. Which is wave C. Now, that can only happen after a zigzag up, right? This move cannot happen after a 5 wave move. So, therefore, it adds credence to the ABC factor, right? It's a very long term. So, after that ABC, we'd be looking for a D wave. Okay, so I'm going to go to the daily now, and the price since 2020 reveals that this is most likely a D wave. Now, I have produced this pattern before, this representation before, so that means that this cannot be a wave 1, 2, right? It is an A, B, C. Now, the reason I left those markings on there, those labels, is to show you that the corrections that occur in wave 2 and 4 of a 5 wave move, or, you know, basically, yeah, a wave 2 or 4 of a 5 wave move is the same correction that occurs in a B wave of a zigzag. Okay, so it can happen in this very same spot. Just don't go trying to label it anything else because it can only be those three combinations, like any one of those three waves. Okay, so this goes to show you that waves can be expanded and they don't just consist of an ABC like Ellioticians would assume, etc. And there are certain things that give it away. You need to learn it to understand what I'm saying. But anyway, so we're looking for an E wave down. Now, this can produce itself in a number of ways. It can produce the same pattern that we just saw, like since 2008, right? basically the same way that this produced this type of weak 5-wave move, right? You can produce it again at a smaller degree, or maybe even similarly, um, or you could just be a straight massive crash back down to zero. And it really wouldn't break any rules if it did, right? Because remember, if we're starting off from 1, 2, 0 is the the critical support for this particular chart. That there is no problem with this going back to zero at all. There is none. Okay. So at a smaller degree, how do I look at this correction for 1, 2? Well, the high is critical resistance. It cannot make another high if this wave count, if this is correct. So the way I count this is a 1 A B C D E. So we're looking for another little bit of a push higher before we get wave 3 down. Okay, now why did I label this an A wave when it looks like a 5-wave move? Okay, so if you're an Elliotician, yes, it would look like a 5-wave move. But there's a problem with this analysis. All right, if you look closely, there's a zigzag right in the middle, right? And then there's this other wave and this other wave, right? Okay, that's the first clue. How can you have a 5-wave move with 2 wave 5s at the end? Okay, I'm not going to say any more than that because there's no point. You won't understand it if you don't know AriasWave. So, anyways, there's A, B, C, D, right? You can see a 5-wave move, a correction, and a weakness that occurred, right, within this pattern. Right, a 1, 2, 3, 4, 5. So that is D done. It's basically a smaller version of the wave pattern that you saw moving higher since 2020 lows, the whole D wave. I'll just mark it out for you here. Right, on a smaller scale, that is the same pattern that we are seeing here in reverse. Okay, so where do I think this will go up to? Uh, Actually, we just don't know. It could go halfway, 50%. It could, yeah, you just don't know. Count 5 waves up, I'll update you. And the reason why is because I need to move on. So looking at the Dow Jones, I'm just gonna point out a very important thing as to why I'm keeping it simple, and that's the key here. Okay, so going to log chart now. For the move up since the Great Depression, what is it? Well, we have another sharp wave A at the Great Depression. That's what I believe the Great Depression low was. A B that went up to the 1987 crash. Oops, one sec. Okay, that's a B wave in my opinion. I know it looks like a 5-wave move, right? Sometimes 5-wave moves can look like zigzags, and zigzags can look like 5-wave moves. Okay, does the market ever give you right? Does the market ever give you the indication that you need to make a trade so precisely? No, it doesn't. Okay, now keeping it simple, back to basics. After that 5-wave move, because you can see clearly there's a break in the middle, we had a big zigzag up, D wave up, D. This is a D wave up. Okay. Interestingly enough, I'm noticing very interesting things with these patterns. We're always coming up to a DE wave lately. We've been doing that for a while. Now, keeping this straight and simple, straightforward, simple, this is a zigzag that's completed at the end of last year. Okay. And this at the top, we're preparing to move lower. Okay. I believe we have topped. Okay. There's a good reason for it, and one of them I'll show you right now. Right, and I'll go up to the highs. I haven't labeled every single wave. I want to keep this simple, and the reason I waited this long to produce this update is because I wanted to see that type of reversal, the type of reversal that we're seeing now. This is a reversal. Okay, how did I come to this conclusion? Well, apart from really pulling apart XLM, um, Bitcoin also has its clues. Okay, so this here is a 5-wave move down. Okay, a 5-wave move down. That's just my opinion. You can take it as you will, but that's a 5-wave move down. And one of the giveaways to this is how this bounced. What's the first wave that happens? A zigzag. What's the second wave that happens? A zigzag. Third is a 5-wave move. Then we had a zigzag and then a 5-wave move. Okay. So that's the thinking behind this. And it also pulls back to 0.618. If you like fibs, I don't typically use them, but I just found this to be very interesting. How it pulled back to, well, actually on this one, it didn't pull back all the way there, but on other charts, it has. Um, so, yes, this top is not easy to pick. And yeah, I think that that's what markets do, right? They don't always give you that clear path to where you're going. So would I say put a trade on now because we've seen a reversal? Well, it depends. Do you believe that this is a completed pattern? If it is a completed pattern, then yes. If you don't believe it's a completed pattern, then no. Okay, it's up to you how you trade, right? How else could you trade this? Well, you could definitely look for a corrective pattern at the small degree and then short it, which I probably will put an update when I see that small degree move, because right now I believe it's pretty obvious, but fair enough. Now, to move along, okay, well, the US dollar, I've already given you my long term perspective on that. I've produced many videos on the different ways that this can produce the pattern. Now, at the moment, this is option 2, okay, which is basically not, wait, hang on a minute. So this is, was this a 385 B? That's right. Yeah. So the 85 version of this, sorry, the long-term version of this is, so this is the second option. The first option was that basically this is where the B wave goes to. Uh, if you want to put that into perspective, I've got to turn all these into size 28. So you can see that this has been an area where we've been consolidating in a long-term, either for wave 4 or zigzag pattern. Okay, so there's no real way to know, but the pattern, like I said, there's only 2 of them. It's either a zigzag pattern or a 5-wave move. So this being the option that is the first option and always was, this means that we're going to see higher US dollar, right? Which is, it makes total sense when you're looking at the bigger picture. We've had a break of the beginning of E wave and we're just going to smash higher, I believe. And then we have no way of knowing the target except a new high above the previous corrective patterns, which I don't think I have on this chart. Let me just check. Yes, I do. We have to go above all of the previous corrective patterns in this whole thing, which means it's got still considerably higher to go. It's going to go much higher. Okay, we've got to go all the way up to that red line. So just think about what that means in regards to, so yeah, this could be a 4 or a B, and this top out will be a C or a 5. Okay, that's all I have time for in this video, but yeah, there is definitely something else going on. In my next crypto market update, I'll explain to you how this will affect cryptos. Thank you for watching.